We found out that Tesla is actually testing a ride-hail platform right now in California and that they have plans to launch it next year. Sounds like they're going to launch it with safety drivers. Not too much of a surprise. They stated that certain states have regulation over that. I guess California has a regulation where you need a safety driver at first, and then you need to pass some threshold of time or miles before you can pull that person out of the car. So, unclear exactly what the laws are in Texas. My guess is they're more lenient. I know there are more hoops to jump through in California. But what does this mean? Well, we've been saying that for some time, even if Tesla were to take a while.
That Tesla is now developing a ride-hailing platform in California and intends to deploy it the next year, seems to indicate that safety drivers will be included in the launch. It should come as no surprise that they mentioned that some states have regulations regarding that. For example, California has a rule that requires a safety driver to be present before allowing you to remove that person from the vehicle, and you have to wait a certain amount of time or miles. It's unclear exactly what the laws are in Texas, but I assume they're more relaxed. I know there are more hoops to jump through in in California, but what does this mean? Well, we've been saying that for some time. Even if Tesla were to take a while to solve for full autonomy, or well, let's say take a while to get regulatory approval for a fully autonomous taxi service, they could start a human-driven ride-hail service. And then they actually already have a better cost structure than the average Uber car in the vehicle, because we know that electric vehicles are, roughly a third of the price on maintenance and operating costs. So there's a lot of strategic, tactical reasons to do so. Seems like that's the way that things are going to go in the early days anyway. And then it's just a question of when are they going to take the driver out? So we've been saying 2025, 2026, roughly 60-40 probability there. Seems like that's still in play based on the announcement. So pretty excited. This stock had a strong reaction following the call, I think likely because people were pleasantly surprised by earnings, which beat expectations. Thanks to pretty aggressive cost reductions on the vehicle platform. They said they achieved a record cost of, it's like $35,100 per vehicle. So that's, I think, what the street was the most focused on. What we've been very focused on, of course, is autonomy. And Sam, you've been focused on the humanoid robots further down the line at the We Robot event. And we talked about this quite a bit internally. I felt like there was an expectation for them to reveal a lot more detail than came out. I mean, if you look at past product releases, it wasn't, I think, too much of a difference there, the We Robot event versus others. So, clearly they were waiting for more of an investor type event to talk about those details, or maybe strategically they wanted keep more close to their chests now that they're actually close to launching. So the big news is when it comes to Tesla's impressive growth, it's not just about observing from the sidelines for Tesla bulls and those with a keen eye for uncovering the next stock market gem. Your one-stop destination for the most recent information on Tesla is Seeking Alpha. Targets for the price of Tesla shares, Tesla's inventiveness, and everything Elon Musk. We are aware that software releases frequently occur. Thus, clicking on the affiliate links in the description and completing a purchase might result in our channel receiving a fee. The latest software tends to happen on hardware 4 vehicles, and then hardware 3 vehicles get it later, especially with the latest versions of the full self-driving software suite, specifically everything 12.5, which was a major update. And further than Tesla said that they were, moving towards this one model approach. I spoke with some people at the We Robot event, and the explanation was, okay, it's actually easier to do this with an end-to-end system. And I say one model for both hardware 3 and hardware 4 vehicles. At the We Robot event, Elon said, he didn't want to get into the details of hardware 3 and 4. So I had speculated, okay, it seems like it's still probable based on what we've seen that they start with hardware 4, and looks like that's what they're doing. So it's not too surprising. And to give you the numbers, it's like roughly 6 million cars globally, hardware 3 and hardware 4, like not quite, but rough, let's call it 50/50 split, really roughly. And then about like half of that 6 million is so they still have quite a few cars on the hardware 4 platform if they want to start there. And then the plan is, again, to kind of basically because the inference chip on hardware 3 has different like power memory limits than hardware 4, they have to change the model and basically compress the model a little bit to make it backwards integratable. And then Elon said, if that doesn't work, then they would swap out the hardware system. And they've been building the cars for a while now, since like the early days of Tesla making their own inference chip and switching from NVIDIA, where there's like a panel on the car that pops up that you can actually swap out that inference chip. So while it sounds, complicated, they've planned for this, many years ago. In case they need to do that, if as a hardware 3 owner, you might not be the first to sign your vehicle up for the platform. Certainly gives you, some incentives to maybe use the Tesla incentives to switch over to hardware 4 if you wanted to. But, I think longer term, they have enough cars in hardware 3 where they're going to want to make it work, as I said. So I think that they'll make it work somehow. It's just a question of how we've dimensioned the market by price point. And there's some market at Uber and Lyft pricing today. It's like under 200 billion roughly in market opportunity at like the 0 cents to $4.00 price point. Then there's like a big portion of the market that, we've done some analysis based on how people value their time. It kind of makes sense if you look at the average cost to drive your own vehicle in the US as well, at around $1 in Western markets. And then globally, like once you expand below $1, then markets like China are in play. China, we had it at 50 cents. It actually looks like it's closer to 30 cents per mile. Prices have come down a little bit for ride hail there. So actually the total global opportunity is over 10 trillion. And yes, the further you move below that $1.00 price point, which is like a big linchpin to open up this opportunity, the more that market opportunity grows to be much greater than what Uber and Lyft occupy today. It's really hard to predict the day when an AI breakthrough will happen. You can absolutely say that Elon's been kind of aggressive in his targets. You'd also argue that like optimism or like aggression in setting those targets is what has helped Tesla achieve what they achieve today. But I would even zoom out and every automaker said that they'd make an autonomous car by 2019. So I don't think Tesla is like alone in this over optimism here. It's just maybe they're like a lot more public and a lot more granular with their targets, which has led to more criticism. I argue that it's like you're charging for a driver assistance feature that arguably is the best on the road, and certainly like feature wise has the most. And all the other automakers that offer like hands-free driving, that's all geofence. That's like certain roads. It's not. And Tesla didn't want to choose that geofenced sort of confined strategy, which is what's made it, arguably a difficult problem to solve. But I think it's like, we believe that they'll get there in terms of like hands-free. So I think that, yes, you're paying for future capability, but you're also, you're paying for your car to get better overnight and for you to kind of